Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It's Thursday morning, September 19, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. US stocks finished with modest losses on Wednesday after the Federal Reserve voted to cut interest rates by half percentage point, relying on the high side of estimates for its first cut in more than 4 years. Citing a greater confidence that inflation was moving towards the central bank's 2% target, the Fed cut rates by half a percentage point as it now focuses on keeping the labor market healthy. After the rate cut announcement, Fed Chair Jerome Powell said the central bank's forecast for the path of interest rates did not imply the need for urgent action. Trading on Wall Street was choppy. Prior to the Fed announcement, the Dow and S&P 500 hit intraday highs before weakening. A rally that briefly drove stocks to their all-time highs bumped into the wall as the Fed Reserve signaled it is not in a rush to ease policy after cutting rates by half point. Later, after the Fed's announcement, the S&P 500, the Dow, and the Nasdaq Composite rose, then paired those gains and turned negative. While that's not necessarily bad, given that aggressive easing is usually associated with economic stress, traders ended up pushing equities near sessions low at the 4 p.m. New York close. All but one of the 12 Fed voters supported the cut, which brings the central bank's benchmark rate to a range between 4.75% and 5%. Most officials anticipate cuts that would lower rates by at least a quarter point each at meetings in November and December. As of 4 p.m. ET, the Dow Jones dropped 103 points or 0.25% to 41,503, while the Nasdaq Composite Index and S&P 500 retreated 0.3% to 17,573 and 5,618 respectively. Small cap stocks, seen as more likely to benefit from a lower interest rate environment, moved higher, with the Russell 2000 outperforming its large cap brethren as it shot up as much as 2.44% before closing up 0.04% on the day. Regional banks, some of which have been stressed by higher interest rates, also gained ground, with KBW Regional Bank Index jumping as much as 3.53% before closing up at 0.46%. Intuitive Machines surged 38.3% after clinching a $4.8 billion navigation services contract from NASA. Treasury yields paired an earlier climb. The yield on the 10-year Treasury note settled at 3.685%, down from 3.694% just before the Fed announcement, and up from 3.64% on Tuesday, its second lowest level in the year. The WSJ dollar index extended decline as the dollar weakened against a basket of major currencies. Volumes on the US exchanges was 11.63 billion shares compared with 10.82 billion average for the full session over the last 20 trading days. Brent crude, the global oil benchmark, is at $73.65 a barrel. Gold is at $2,558 per ounce. My take on the market look ahead. Though it is important to note that stocks are not yet rocketing ahead after getting what they wanted, because a lot of good news was priced in. However, lower interest rates and a stable economic backdrop should broaden the opportunity in equities. That's it for today, folks. See you tomorrow morning. In the meantime, let us know in the comment section what are your thoughts for the market. Happy investing, stay inspired, and remember, it is all about money.